One of the clouds perhaps on the horizon might be the possibility of an economic slowdown here in the US, the possibility of a recession. There are indicators that point toward that. Is that something that concerns you?
I think as long as you're very cautious in how you buy, as long as you're driving the right brands and you're having a team that is really deeply passionate and is doing their best for our customer, I think you can mitigate some of those moments. And so we ended the year with inventory down 7%, on a plus 3% in our US sales. That's a very healthy place to be because we don't want to have too much inventory if anything were to happen in the economy.
But a slowdown would surely change the shopping habits of your core customer.
The core customer we have is a luxury customer. They usually get impacted by any slowdown in a different way. And you can always win a customer if you bring what's unique to them. So I think to me what it does is it increases the higher stake on how do we convince, how do we delight the customer. I don't think it necessarily leads to a steep decline in sale.
Did you see any pullback in sales from that customer when we saw the stock market fall in that run up to Christmas and the holidays?
No, what we saw is a change in habits. So people shopped a lot during Black Friday and we had a record-setting day on Cyber Monday. And then there was a slowdown between that moment of anticipatory holiday shopping and the last minute rush for the holiday shopping just before Christmas. So there was a slowdown there, but more because customers basically shop differently. The aggregate was still a positive quarter.
Does that mean though that they want more promotions and you have to be more promotional?
We're feeling the competitive pressures. Our competitors are much more promotional than we are. And we've chosen to participate, but in a very deliberate way, in a way that protects the interests of our brand partners.
It's no secret that Neiman Marcus has quite a large debt load. How does this constrain your ambitions for the company?
That's a capital structure question, if you want. We basically have enough cash with $700 million of available cash. We generate enough cash from our operations to service the debt and to invest in our strategic plan. It doesn't prevent us from really growing the business. It doesn't prevent us from transforming Neiman Marcus Group in a luxury customer platform. So for us, the debt is something we are dealing with. We have an agreement in principle to extend the maturity with our debt holders and term loan holders, but we're very focused on driving the business, and one doesn't impact the other one.
Those discussions and that agreement in principle you just referenced are still ongoing though. When do you expect to have some sort of resolution?
They're ongoing. We expect resolution hopefully very soon.
What's very soon?
We can't predict. I think we are making terrific progress right now, so I hope to be able to come back to you really soon.
Now, 2 years ago, and before you were CEO, Neiman Marcus explored going public. It explored a strategic sale to Hudson's Bay. Obviously, neither of those things happened. What does the future hold?
In the short term, we're very focused on driving growth and implementing a plan. In the future, that's going to make us very attractive to the public market, to any strategic buyer. But right now, we're very focused on driving sustainable growth.
But it is something that's at the back of your mind, if not front of mind.
We're owned by private equity. They're long-term investors. We're very much there to create a sustainable business model and shareholder value.
Of course, and you say they're long-term investors, but usually private equity is looking for an exit. Do you have a sense of how long you might have before they look for that?
We've always told ourselves we have 4 to 5 years, which I think is a good window, because if you have too short, you're not making the strategic moves that you need to have, and you don't have the ambition that is transforming a business. If it's too far, you lose sight of the drive and measuring the impact that you're having.